Hey everybody, Art Wood, your favorite mortgage guy. If you didn't know that, just ask me, I'll tell you. Anyway, it has been a rough road for interest rates over the last couple of days, and you'll probably not read about it for another week and a half. Generally, when rates are going down, you hear about it pretty quickly. When rates are going up, the media wants to make you think they're lower earlier. So you'll probably see something. Rates hit a historic low. Unfortunately, we've lost about 1/4 to 3/8 in rate over the last 2 or 3 days. Let me just tell you, make an effort anyway to tell you why. So mortgage bonds is what drives interest rates. And so you don't want to be caught necessarily with a low interest investment when inflation is going to hit. Why do you think inflation is going to hit? Because the increased optimism around a huge stimulus, a $1.9 trillion stimulus. And a recovery in the economy. So what happens is there's unprecedented savings out there, and people are actually sitting at home waiting for stuff to do. So they anticipate that there's going to be a significant amount of inflation coming. So you don't want to necessarily hold on to an interest-bearing asset that's a pretty, a low interest-bearing asset. So people are selling off mortgage bonds. Now, I'm visual, so I want to show you this video. If you look, it's just over the last quarter. And if you look, it shows that mortgage bonds are basically dropping off the cliff. With mortgage bonds, when they go down, that's bad for rates. Okay, when they go up, that's good for rates. Now, to also kind of give you another graphic real quick, I'll stretch it out over a year, and you can see all this craziness back from March in 2020. That's when the pandemic hit. And it was like, oh my gosh, it went down, then it went up, then it went down, then it went up, and that's when they passed the first stimulus. And the Fed started buying all these mortgage-backed securities. So if you look, rates are still fantastic. They're just not as fantastic as they were. There's still an opportunity. We still are seeing lots of folks buying a lot of house for their money, and we're still seeing people take cash out, renovate, do all kind of things. And for really anybody that's over 4%, it's still a great time to refinance. You're never going to ever hit the nail on the head and buy at the highest or the lowest price, or get the absolute lowest interest rate. The more that you try to time that, the less luck you're going to have. Talk to a financial planner. You never want to time the market. But I just want to say this. Number one, to show you what a mortgage nerd I am, to let you know exactly why things move. And really, thirdly, just to kind of say, now's the time. I mean, I hate to say, hey, 3.5 is going to be great. 3.5 is still a great rate. It's just not where we've seen for the last year. So I'm happy to just take a look at any questions you may have about your scenario, your situation. If you want to just talk mortgage nerdiness with me, that is totally cool. You can reach me at 404-909-3567 or email me at art.wood@goldwaterbank.com. As always, it's a pleasure to be your mortgage guy.